So, colleagues, ladies and gentlemen, we're about to begin. So I'll ask that we take our seats. If you haven't had a chance to grab your breakfast, don't worry, we are not going to clear that setup until after we're done with the event. So I'll ask, if you're outside, to please take your last item and then come in. If you're in the room, please settle in. In case you needed to know where the facilities are, the quickest ones are outside on my right, on your left, and there's a big passage there. You'll see the labeling for ladies and gentlemen. So I'll ask that we settle. If you could please take your seats so that we are able to begin in good time. It's quite a packed program. So please take your seats. We are about to start. So good morning once again, ladies and gentlemen. And we thank you for being with us this morning. We know in Kenya, as the year comes to an end, there's a lot of activities, lots of discussions, and especially lots of launches of important things. But we thought this one for this morning is a particularly important one, and you'll know why as we go on through the program of the day. We ask that you settle in. It's going to be quite an intense morning, not just about what we're launching, but also what you'll see out of it and what you'll interact. But before we begin the program, I will ask that if you're able to please stand at your place. We want to have our national anthem. We thank you. You may take your seats. We want at the beginning to observe all protocols with all our honorable guests, the speakers we shall hear from this morning, and above all of you who are here with us in person, and we do have a very big audience that is joining us from the internet, so people have logged in to our platforms and they're able to follow the proceedings that we have this morning. So all of you, karibuni. From those of you that are outside of Kenya, karibuni to Kenya, karibuni to Nairobi, karibuni here to the Safari Park Hotel, where we are preparing to launch the 2024 FinAccess Household Survey Report. At this point, I want to invite my colleague Katunge Kilu from the Kenya National Bureau of Statistics to just say a prayer to make sure that these proceedings are blessed.
Good morning, shall we pray? In the name of the Father, the Son, and the Holy Spirit, amen. Almighty and ever-living God, we thank you for this day. We thank you for bringing us here. We thank you for how far we've come in the process of preparing this report. We thank you also for those who represent government and our partners who are present here, and for our country. We ask you to help us, Lord, to live in peace. And as this launch proceeds, we ask that you be with us up to the end, and may your will be done, for this is through Christ that we have prayed, amen. In the name of the Father, Son, and the Holy Spirit, amen.
Thank you very much, Katunge. So we want to begin our program, and please, I want to see some energy in the room. You've all had an excellent breakfast, and if you haven't, you're continuing to have an excellent breakfast. It's quite an interesting report. Those of you that have interacted with the FinAccess surveys since the first one that was done in Kenya in 2006, you know how exciting this can be, because it reveals certain things about ourselves as Kenyans, and especially from our fellow citizens, how they interact with the financial sector, how they interact with money, their health, and a lot more that we'll be interacting with and seeing this morning. So the last survey that was carried out was in 2021, and there have been very interesting findings since. If you remember, 2021 was when we were coming out of COVID, and that particular pandemic had really deep implications on where we are, not just here, obviously, but everywhere in the world. But our particular concern is how we are as Kenyans. So the 2021 survey had interesting findings, and the 2024 survey, 3 years later, as you'll hear from the different presenters and my colleagues, also has quite interesting findings for and the implications for our fellow citizens. You may have had a chance to interact with the program, whether you got it or you've been able to download it. There's QR codes on the tables. We have altered it slightly for the very, very excellent reason that our Cabinet Secretary, who's our chief guest this morning, does have a very, very tight and committed calendar. So he will have to leave before we finish all our proceedings. So we wanted to make sure that on our side, we take full advantage of the CS being here, but also on the Cabinet Secretary side, he has a chance to interact very briefly with the report formally, although he has a copy with him. And so what I will do now is take an opportunity with great honor to invite the Deputy Governor of the Central Bank of Kenya, Dr. Susan Koech, to come and make brief remarks, and she'll then invite the Governor, who will then invite our Cabinet Secretary. DG.
The Cabinet Secretary, National Treasury, Honorable CPA John Mbadi, the Governor of the Central Bank of Kenya, Dr. Kamau Thuke, representative of the Cabinet Secretary for SMEs and cooperatives, CEO of FSD Kenya, Tamara, and the Director General of Kenya Bureau of Statistics. Distinguished CEOs present, the chairpersons present here, ladies and gentlemen, good morning. Good morning once again. On my way to the podium, I had a choice, actually two choices. The first one would have been, I come through there and walk straight here. The second one was, I come through this shorter route and to be able to arrive as I did. I didn't choose the other one because it's longer and it would have made me look like I'm doing some catwalking. And as a dedicated and career banker, we don't know anything about catwalking. So I chose to take the shortest route to the podium so that I can be able to first appreciate each and every one of you for finding time to join us this morning. I wish to thank the CS National Treasury that despite his schedule, tight schedule, he found time to grace this occasion. As we are all aware, we have had this is the seventh FinAccess survey. The first one was done in 2006. And out of these surveys, which I really wish to appreciate my colleagues from the Central Bank of Kenya, our colleagues from the Kenya National Bureau of Statistics, the FSD Kenya teams, and the joint financial sector regulators for their input. Because over time, we've used the results of these surveys to be able to make policy decisions that have been impactful to the lives of Kenyans. And so once again, as we come to be able to listen through and to be able to see what came out of the 2024 FinAccess survey, it's also an opportunity because we know that it was really stakeholder driven I think the first stakeholder meeting was in November 2023. And out of that, and we have had several other conversations. And so today is such an important day, not just for the Central Bank of Kenya, but for all of us who are seated here, and especially for those of us who are passionate about financial inclusion, who are passionate about understanding financial health, who are passionate about understanding the issues around the gender divide, and more importantly, who are passionate to know with the emerging risks that have been able to come over time, for instance, the climate change, how do we sit? And more importantly, for all of us who know that we are also starting off the journey for the National Financial Inclusion Strategy. And so we know that so it's really an exciting day this morning. And it couldn't have been more exciting if, in addition to the other stakeholders I mentioned, if we didn't have the Alliance for Financial Inclusion, the Kenya Deposit Insurance Corporation, Equity Bank, Safaricom, UN Women, who also have hosted us for breakfast this morning, IFAD, and the Kenya Mortgage Finance Refinance Company, also not only supporting us financially, but also having dedicated resource as we progress. I want us to be able to reflect, and especially to see what we have been able to do around issues of the digital credit provider space, to be able to regulate that space. It was out of actually the FinAccess survey that was done. You also look at it and see that we also had to roll out the banking sector charter. We also introduced the cost of credit portal, and we have a lot of work around the consumer protection framework, which we have been able to put it together, importantly, out of the previous surveys. And this specific one, we've also seen that out of, the pandemic, the COVID-19 pandemic, and then more importantly, looking at where our people were sitting, we saw the government came up with the Hustler Fund, which also has led to not just issues of credit repair amongst Kenyans, but when you look at it, and especially at the Central Bank of Kenya, when we normally do the agricultural survey, you realize that for some Kenyans, actually they fund their agricultural activities out of the Hustler Fund. So it's been really a very good journey for us, just ensuring that whatever comes out of that survey, that we use it for decision making. And so, I want to take this opportunity, when you're given opportunity to do welcoming remarks, you be a bit brief as I have become today, so that you don't say what your boss is supposed to say and the subsequent speakers. So let me stop there and take this opportunity to welcome the Governor of the Central Bank of Kenya to come forward, give his remarks, and subsequently he will welcome the CS. Welcome, Governor.
Thank you, DG, and good morning, everyone, and all protocols observed. Mine is really just to invite the CS to make his remarks. Unfortunately, the CS has to leave a bit earlier than we had hoped. He has some other pressing business that could not be postponed. It's for this reason why the keynote address is coming after the presentation, a bit inverted. So let me also take this opportunity, CS, to thank you for accepting our invitation. We really do appreciate that. We wish you would have stayed a bit longer, but mine is just really now to welcome you and to ask you to make your keynote address.
Thank you very much, Governor. My apologies for causing disorganization of the program. I wish I could have avoided this, but unfortunately I have to get to other engagements, and this was equally important. So, Governor, I decided to come first and disorganize you. I am sure after my disorganization, you'll find a way to again organize yourselves and get back to the program. My sincere apologies. So I'm told there is a representative of the Cabinet Secretary, Ministry of Cooperatives and MSMEs. I hope that is correct. Yeah. So the Governor, CBK, Dr. Kamau Thuge, the Deputy Governor, Dr. Susan Koech, the Director General of Kenya Bureau of Statistics, Dr. McDonald Lubudo, the CEO of FSD Kenya, Ms. Tamara Cook, Chief Executive Officers present, distinguished guests, ladies and gentlemen, good morning. Yeah, the recent focus in Kenya on the state of economy, not just in macroeconomic terms, but also in real terms, the issue of money is in the pockets of people, or people's pockets, has surprisingly become very critical, and it dictates that I start off by confirming that it gives me great pleasure to join you in this morning for the official launch of the 2024 Financial Inclusion, which is dubbed as FinAccess Household Survey Report. At the onset, I would like to thank the Central Bank of Kenya for inviting me to officiate this significant occasion. Although this is my first time to attend the launch of a FinAccess report, I understand it is the 7th in a row. It is certainly a pleasure to join those of you present, both physically as well as those who are following us online, to unveil a most comprehensive and informative report on the entire financial sector in our country. That is the 2024 FinAccess Household Survey Report. It is evident upon perusal of the documents that I've just seen, and also looking at the program that is outlined, that the development of the report involved a multi-partnership effort comprising the public sector, private sector, and of course the development partners. So this multi-pronged participation by diverse stakeholders provides a strong foundation for the development of data and evidence-driven policy making. Ladies and gentlemen, the unifying factor for all Kenyans remains our Constitution 2010, more particularly Article 10, which outlines the values that must guide not just public and state officers, but all when making or implementing policy. Inclusiveness and protection of the marginalized are two values that jump out at me at this specific occasion. Let this data not remain just numbers, but let us translate them into real persons as we unpack and develop policies, as we innovate, and as we think about services and other initiatives so that the data have real impact on the people. The Kenya National Bureau of Statistics 2024 Economic Survey Report states that the financial services and insurance sector accounted for the fourth largest share of our GDP at 7.8% in 2023. And this recorded the fourth highest growth rate of 10.1% during the same period. However, employment remains an aspect of concern to all, and undoubtedly this sector also contributes employment and job creation in our economy. This therefore necessitates that the sector is an area of focus to both public and private sector players. It is commendable that policies adopted in the past have significantly contributed to creating an inclusive environment for Kenyans to access formal financial services. Indeed, the advent of the mobile money in November 2007 remains the single most important decision made by the government in changing Kenya's financial inclusion landscape. Ladies and gentlemen, you will remember or recall that those days when people in urban areas, and I remember those days I was going through my university education, anytime you are going home, you had to be sent to the village with money in envelopes to go and take to relatives back at home. And you'll still remember buses being used, a Kamba bus, if you are coming from, especially Western Kenya region, I believe even at the coast, that people were using a Kamba bus to send money, and it would take some days. I think that has changed with the mobile money, and things are much better. So the days when reliance on other modes of payment, such as money orders or physical visits to bank branches, remember when we were in high school and letters were being read in the parades, and you are expecting money to be sent through money order. You are looking for that color of the money order to appear. If the teacher was reading, or whoever, or a prefect was reading the letters that have come, so you check around to see if there is any possibility of that color of the money order appearing, then you start hoping that it is yours. Those have now since changed with the revolution, especially of the mobile money. So that is no longer with us. Mobile money technology has bridged the gap between rural and urban dwellers, between male and female, and between people from different social strata. As a result, financial inclusion has grown remarkably from 27% in 2006 to almost 84.8% in 2024. So today, Kenyans can enjoy services across banking, payments, insurance, SACCO savings, access to credit, investments, among others, from the ease of their offices at all homes, merely at the touch of a button. This is incredible for our country. The fusion between mobile money, internet banking, and other digital platforms significantly contributed to the resilience of Kenya's financial sector during the COVID-19 pandemic, as most services continued with minimal disruptions through digital platforms. The same platforms have been used to deliver social transfers to vulnerable groups such as the elderly, support to victims of climate change disasters, and provision of other solutions such as microinsurance and microcredit to farmers and small businesses. While we have a lot to celebrate, ladies and gentlemen, we must also step back to reflect on the gaps identified in this survey that is going to be unveiled. One is that the puzzle of rising financial inclusion against deteriorating financial health among Kenyans must make us start asking questions. From a moderately average level of 39.4% of Kenyans considered financially healthy in 2016 to now just about 18.3% in 2024, we need to have a conversation on these trends. We need to know who are benefiting from this rapid growth of financial inclusion and why a majority are becoming worse off instead of enjoying inclusion dividends. We need to know the appropriateness of our policies, products and services, and innovations vis-a-vis the needs of our people. We must know whether banks, SACCOs, microfinance banks, insurance companies, digital credit providers, among other players, are customer-centric as they come up with policies and innovations in the financial sector. So the consumer protection heat map has indeed highlighted several issues that characterize financial service providers and thus require attention to ensure consumers' needs are met. So, ladies and gentlemen, the numbers on the level of financial literacy in Kenya are also perturbing. As of December 2022, Kenya's literacy rate was estimated at 83% for those aged 15 years and above. The survey has revealed that only 42% of Kenya's adult population are highly financially literate, 41% being classified as financial literate, 14.5% partially financially literate, while 2.8% are not financially literate. This reflects the understanding of the cost of borrowing, impact of inflation on the incomes, and risk diversification. Financial literacy is critical in budgeting, smart decision about money, even at personal level, quality of financial services, consumer protection issues, and overall financial health. I hope the ministries present here, as well as other players, will make this strategic initiative for our people in their work plans. So, at workplaces, we need to have a system of helping provide information on financial literacy. We shouldn't, especially the HR departments, should incorporate financial literacy in their HR training manuals and programs. Another concerning statistics is the proportion of Kenyans completely excluded from accessing and using any form of financial services and products. Despite the wide range of products and services and providers spread across the country, we still have about 9.9% of Kenyans, which is around 4.9 million people in absolute terms, completely fully excluded from both formal and informal financial services. Why is this number still so high, and what is the impact of exclusion to this population? What is the role of each player present in reducing to this number to below 1%, which is the most desirable, and enhance universal access? Excuse me. The National Treasury takes the outcomes of this survey seriously and will work closely through this partnership to embed them in the financial services sector medium-term plan, the fourth medium-term plan, which runs from 2023 to 2024, and which is about to be finalized. The MTP4 plan, launched by His Excellency the President in March 2024, aligns the country's financial services sector to global best practices that requires Kenya to leverage on detailed policies and stronger institutional and market underpinnings for financial access, efficiency, and stability. The plan also captures priority areas from the bottom-up transformation agenda, which is now commonly referred to as better agenda. I'm confident that the 2024 FinAccess household survey findings provide additional information to enhance the MTP4 plan. The National Treasury will engage with all stakeholders involved in this survey to ensure that we craft and implement evidence-based policies to create a conducive environment that leaves no one outside the financial sector, regardless of their social status. So before I come to conclusion, I just wanted to say two more things. In my engagement with the governor, short engagement with the governor, and for those who may not know, the governor is a long-time friend of mine. We have engaged for a very long time, from 2012 to date. We started off somewhere in Naivasha when we were working in the task force, which came up with the Public Finance Management Act. And since then, we have worked closely, even when he was the PS at the National Treasury, and now again at the Central Bank. The question that is in the minds of Kenyans today is, yes, we have our fundamentals, economic fundamentals, working very well. We have these numbers. We have the economic growth that is average and above the world average. We have a very healthy reserves. We have a very stable shilling, in my view, for the past 2 or 3 months. We also have inflation at almost its lowest in a very long time. We have exports showing very positive signs. We have diaspora remittances working very well, and many, many other things. But then you hear this statement consistently in the streets that Kenyans don't have money in their pockets. So we are in these positions of decision-making, policy decisions, to solve people's problems and challenges. So you cannot close your ears, you cannot close your eyes when people express that they feel that they have no money in their pockets, that they have eroded purchasing power. So the first question that we must ask ourselves is, what is causing this? I have shared with the governor. I've also had my thoughts in this, and I think there are 3 areas that need to be looked into. The first one is credit accessibility. We have talked about this. I know the governor is taking action, engaging with our banking sector on this, because again, it is the governor's central bank who can engage at that professional level with the banks. We don't want to see cabinet secretary getting engaged on this matter, because that would politicize the whole thing. We do not want politicize the financial sector. We want the financial sector to operate professionally. And that is why the governor has taken an initiative and is leading this process. It is my hope that the banks will see sense in reducing or lowering interest rates. The argument has been that the base rate has been high, the CBR rate, which now is coming down, at least to 12%. I don't know what the CBK Monetary Policy Committee will decide on Thursday. Hopefully, it will come further down. But even without that, I think the government has also shown some level of responsibility at the fiscal level. That is why, for now a number of weeks, we have been borrowing at a lower interest rate. The interest rates have been coming down. I remember when I came to this ministry as a CS, the 91-day treasury bill was at over 15%. Today, we are talking about 12-point-something%. It's below 13%. And we hope it will come down. So let us see reciprocity. Let us see the banks responding by also lowering the interest rates so that Kenyans can access credit facilities to expand their businesses. And I said that it is affecting more the middle class who are starting up micro, small and medium enterprises. So let us see some response from our banking sector. I have told banks that, if this economy chokes, they are the biggest losers. So we need economy that is growing for the benefit of all of us. So that, to me, is the first one. The second one is the issue which we have talked about a lot, about the pending bills and possibility, and the fact that government is not paying for goods and services supplied, which again starves the businesses of much-needed liquidity. Again, the government is working on that through my ministry to make sure that we have a strategy to settle the amounts owing to business people from the government. Finally, is the issue which is affecting the working middle class. The working middle class feels that from around last year, their salaries have reduced by about 8%. And by the way, 8% is not a small percentage. It's huge. Because once you are taxed, if you have a gross salary of 100,000, it is taxed, and then you have other commitments, you make payments to your SACCO, loans, etc., you barely remain with 20% of your salary to meet your day-to-day commitments. If you're paying rent, you pay rent. If you're buying food, you buy food. Transport is etc. If someone takes 8% out of it, obviously you are disorganized. And this has come about, and I understand it perfectly well. This government came into office with an unsustainable fiscal framework. If you are coming into office and the borrowing is almost hitting $1 trillion in an economy of our size, then it must worry you. So the government came with a deliberate strategy to reduce and come down on the fiscal deficit, which was about 925. So last billion Last year, it came down to 835 billion. I'm happy to report that this year we are projecting to spend no more than, or to borrow no more than 768 billion. So that in the next financial year, we even reduce this further to 760 billion. So that necessitated revenue mobilization, and that is what necessitated some of the increases. Of course, there were also other government agenda, like the provision of housing and the universal health coverage. But my intention, and which I will share with the cabinet, is once we are clear on this fiscal consolidation, which I think should take us a year to see how effective KRA is performing, and they have started showing very positive signs in my view. November was a bit hit. October was good. November was a bit hit, but still even that, we haven't fallen off the target much. I think November was hit by some challenges, technological challenges, etc. I believe December will be better going into into 2025. If we can show some good progress there, my proposition would be to see how to look at the pay as you earn, to see the percentages, work the numbers, do analysis, and see if we could reduce the pay as you earn, maybe take them back largely to where they were, so that we can deal with this reduced purchasing power by Kenyans, because it's a concern. It's something we must deal with. But we are working on the numbers, we are analyzing the numbers just to see, so that we also don't make a mistake, because you can also make a mistake and go back to where we came from. But I'm seeing progression. In fact, if we manage the fiscal deficit to 768 this financial year and reduce it to 760 the next financial year, 2026-27, we intend to borrow no more than 597 billion. And you can see that percentage is going down. The benefit will trickle down to the economy, including even the rates that we are talking about, the rates that are charged by banks. I think I would have said much, but today I wanted to limit myself to just some of those comments, and allow me just now to go to my conclusion. So in the Kenya National Bureau of Statistics, Financial Sector Deepening Trusts, financial sector regulators, and local and global partners that work together to ensure we have additional information that would help us buttress our policies in the financial sector. My team present here will closely work with you to fully benefit from this report. And I saw the likes of Nyangala here. Yeah, so my team is here well represented. So we will work for this report in fostering a financial system that is inclusive, equitable, and stable for inclusive and equitable growth across the country. With those many remarks, I don't want to call them few, it is now my duty and honor to officially launch the 2024 FinAccess Household Survey Report to the public. Asanteni sana.
Thank you very much, CS, the Honorable CS for the National Treasury. Bwana CS, permit me to say that the danger and the risk when you move from being a politician and you go back to being a technocrat is you say very exciting things, but no one recognizes what you said. So you said you're reducing our taxes, people just sat there. So could you please very loudly applaud? You are going to Christmas, so I think that's a very good Christmas present. An appropriately sized round of applause to the CS, not just for that announcement about what may happen moving forward, but I think also to appreciate his launching of the product. But we want to do it a bit more colorfully, so I would like to ask that our CS, accompanied by the Governor of the Central Bank, also accompanied by the Director General of the Kenya National Bureau of Statistics, the Deputy Governor of the Central Bank, the Commissioner for Cooperatives, the CEO of FSD, CEOs present from the Joint Financial Sector Regulators. To please go to my right, my colleague Katunge, if she's not there already, she'll be there in a few seconds. She's there already. We want to sort of do this a bit more colorfully, in a bit of a memorable way. So if you just make your way there, CS Governor, the Director General, the Deputy Governor, the Commissioner for Cooperatives, the CEO of FSD, and CEOs present from the Joint Financial Sector Regulators. If you're there already and properly arranged, and Kotunga, please be careful that they are as safe as possible. Very good. So I want to then hand over the audio to Katunge to lead us in counting down to this launch of this year's FinAccess survey. So if you just keep your eyes on the screen, those of you that are watching us online, plus also those of us in the room, you'll perhaps be able to see it a lot better. Katunge, over to you.
Thank you, Wallace. Thank you, Wallace. Yes, I agree. We need to be a bit more colorful this time. We will wait for the chief guest, the Honorable CS, to cut the ribbon. But while he's at it, we are going to count down at least from 10. All right? So please don't let me down. Let's count at least from 10 as CS when we get to 1, because you understand math. Then you can cut on the ribbon, right? Thank you very much. If you're accompanying the CS, please smile, because already the cameramen are there. So we start, ladies and gentlemen. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Thank you, CS. Makofi tafadhali. Thank you very much for that. Ladies and gentlemen, the 2024 FinAccess Household Survey Topline Report has been officially unveiled. Thank you very much. Makofi tafadhali. Thank you. So there you have it. If you are accompanying the CS, please stand where you are so that we can issue the report for the photo session. Thank you. Now have the photo session. Each of you will get a copy of the report. Please remember to hold the report in an upright manner. Thank you. Camera crew, take it away. Thank you very much. We shall have one more photo, please, Honorable CS, if you don't mind, with the partners. Partners, please make your way if you haven't come here already, so that we can have the report. Any of the partners who remain seated, thank you.
And all our partners, AFI, if we have Equity,
RBA,
Equity Bank,
yeah.
IFAD,
Safaricom,
UN Women. I know the Joint Financial Sector Regulators are already there. These include the Capital Markets Authority, the Insurance Regulatory Authority, KDIC, the Kenya Deposit Insurance Corporation, the Retirement Benefits Authority, and SASRA. We know those are already there, but just to mention them by name. You'll be hearing a lot more of this in terms of the partnerships, but they were actually very, very useful in providing not just the resources, but also being able to drive certain aspects of the report, trying to deepen it. So all the partners who are there, who have just named over and above the Central Bank of Kenya, FSD, and KNBS.
including UN Women. Thank you very much. All smiles, Campbell, UN Women, all smiles. Thank you. Thank you very much. A round of applause, please, for that. Thank you very much, Honorable CS and the rest of the team. Thank you. Over to you, Wallace.
Asante Katunge, and thank you very much to everyone who has joined in the official launch of the survey. So we'll ask, as the CS makes his way out, and you have our permission to depart, as CS indicated, he does have quite a tight schedule. We'll ask the rest of us who are there to please take our seats, because we now want to get into the meat of this FinAccess Household Survey Report for 2024. So once again, Asanteni, and we'll be joined back by the people who have taken it upon themselves to see off the Cabinet Secretary. So this stage, I want to invite a colleague from the Central Bank of Kenya. You may have seen him still typing the report. Isaac Malumefika imeisha. Now come and tell us. Dr. Isaac Mwangi from the Central Bank of Kenya, who has been instrumental and key in being able to drive this report, to take us through some of the findings. And also, we know there's a lot of interest in the methodology. How did you come and arrive at these findings? So Dr. Isaac Mwangi will take us through quite a bit of that. Dr. Mwangi.
Good morning, all protocols observed. Mine is very simple. Following the official launch of the report, I'll just take you through the key findings, the top line findings, so that we can appreciate the journey. And to start us off, I want to give a small history of the FinAccess, where it all started. As has been mentioned earlier by the earlier presenters, we started this journey in 2006. So it's been a journey, and this is the 7th in a row that we are launching today, to be able to assess where we are as a country, and also to be able to inform the various stakeholders on the market opportunities and the data sets that we have, and how rich the data is, and how you can leverage on the FinAccess findings to be able to make policies, to be able to design products. So it is for the market, and this is a public good. We do it for the public, and that's why the data is freely available on our websites. When we started off in 2006, we used to work very, very closely with the Financial Sector Deepening Kenya, who are the main financiers. But over time, as we've been able to see, the partnership can only grow, and we invite each one of you to partner with us in subsequent FinAccess surveys. So allow me to move, and we'll start by recognizing the partners, and they have already been recognized by the chief guest. These are the partners that we have been working with over time, and as I have mentioned, the partnership is growing. From 2006, when we used to have only CBK, FSD, and KNBS, now we are seeing over 10 both local and international partners coming in, and there is room for more. We have enough space for every one of us, so feel free to partner with us as we move along, and special thanks to our dear partners who have made this a possibility. In terms of the presentation, it's going to be very, very straight presentation. We will first look at our top line findings. Then we are going to look at what each and every stakeholder and each and every financial provider has done in that space of financial inclusion. Then we are going to have an interactive session whereby we are going to interact with the data, and you'll be able to see how best you can be able to pull out the data play with it, triangulate, and even do your own cross-tabulations for policy, again, and other purposes. So in terms of the methodology, this survey, we work very, very closely with the Kenya National Bureau of Statistics. The Kenya National Bureau of Statistics is the one that is mandated to conduct all statistical surveys in Kenya, and it supports government and other agencies in terms of rolling out the surveys. So this survey and the results are scientifically sound. So if you take these results and subject them to some rigorous tests, you find that they meet the minimum threshold in terms of the expected statistical requirements. Then, ladies and gentlemen, I want to take you through why FinAccess. I know since we arrived, you've had enough mentions of the word FinAccess, and probably for those who are coming for the very first time, you may want to understand why are we interested in this FinAccess. And ladies and gentlemen, what I want to say is that, one, the FinAccess provides us with a very rich set of indicators, which is important for tracking progress in the financial sector. The FinAccess is also very, very instrumental in providing measures of financial inclusion, and this is from the demand side. Remember, from the supply side, we have the financial sector regulators, we have the commercial banks, but for us, we are able to take the data from the households and actually assess whether the reform package that we have for the market is actually working. So through the FinAccess, we are able to track the level of financial inclusion in the country. And for the first time now, we have a time series analysis of the county data sets. In 2021, we did collect the first point at county levels. So this time around, you'll be able to see where you come from in your county. Has financial inclusion deepened or has it narrowed? And that will be also in the report, which will be issued with a little later. We're also able to see a high quality, timely, and reliable data, which our stakeholders can use in terms of tapping and designing new products for markets. You are able to, again, look at the data as a researcher, and you can use that data as a researcher to be able to do your own analysis. For the financial sector regulators, I know quite a number of programs have been rolled out in the last 3 years. You also want to assess whether the reforms that you have instituted are working and are supportive of the market. And lastly, when we talk about the FinAccess, it's able to provide the latest statistics at the household level, at the locational level, county levels, and this evidence-based kind of analysis is important for supporting policy. So, as I mentioned again, this is the 7th in a row, and we do this every 2 to 3 years, and the next one we look forward to even more increased partnership. So kindly move. Yeah, when we talk about the methodology, again, we look at financial inclusion along 4 dimensions. We look at the issue of access to financial accounts, and here we look at whether in the last 12 months, in your own name, you have been able to do an operation. So, sorry. Yeah, so we look at the last 12 months when we come to visit you in your households, and we did have our research assistants go around the country, collect these indicators, and they could come to your household and ask you whether you hold a bank account, whether you have a SACCO account, whether you have mobile money. So that is what we were actually interested in, so that we are able to fill that gap in terms of the access. Then we move to the issue of usage. And here we look at the whole broad spectrum of the financial ecosystem, whereby we look at insurance, we look at pension, we look at SACCOs, we look at capital markets, and indeed all the products in the financial ecosystem, and we're able to ask you whether you have a bank account, whether you have a SACCO product, whether you have mobile money, is the account in your name, and of course, under usage, we also seek to understand, even if it is not in your name, are you able to access the same product, maybe through someone else's account? And you find for most of the dependent population, most of the accounts they operate are registered in other people's names, probably in your old lady's name, in your spouse's name, in your sibling's name. So we also look at that secondary usage of financial products and services. Then we move to the quality dimension, where we look at what characterizes the various products and services that you use. Then we look at the appropriateness of that, and also we try to bring on board the issue of financial literacy. We look at the issues of consumer protection, and whether we are able to deal with the barriers to access at that point in time. Then lastly, we will look at the issue of impact. To what extent are we able to leverage on financial inclusion to be able to address our needs? So financial inclusion in itself is not a panacea to poverty eradication. But what we say is that when you are financially included, there is a possibility that probably in terms of welfare, you will be better off than someone who is not financially included. The reason is that most of this support, for example, if it is cash transfer, it will come to you through the financial inclusiveness. So if you are financially included and you are dependent, then the government can be able to throw some cash transfers to you if you have a mobile money account or if you have a bank account. And therefore, this is a very important dimension of financial inclusion that helps us understand to what extent financial inclusion is able to address and meet people's needs. Then we also look at it in the line of financial health. We also want to understand, are you financially healthy? So are we able to see an increase in financial inclusion that is also supporting financial health as a person? Are you able to meet your day-to-day needs? Are you able to invest in the future? And you are able to cope with risks? So those are the issues that we'll be looking at when we'll be talking about that. Then in terms of the implementation in the field, we focused on those who are 16 years and above. So the data set is rich enough to cover the 16-year-olds and above. However, for the analysis and the report that we've done, our analysis is based on the adult population so that we are able to compare it with other jurisdictions. Now, in terms of the domains, we look at all the 47 counties. So we did cover all the 47 counties. And then we looked at this data along the rural and urban and also at national level. So the data and the statistics have been reported along those 50 domains. Then the sample size that we covered this time was 28,275 households. And this is drawn from 1,885 enumeration areas. And again, as I mentioned, we work very closely with the Kenya National Bureau of Statistics, who are able to provide us with a sample, and they create the sample for us. So in terms of the response rate, we were able to attain an 84.6% response rate as evidenced in that chart. And in terms of the age distribution, again, we have a normal distribution. You can see that we had a balance of all those who are aged between 16 all the way to above 55 years. So I will not dwell much on this because it's already in the report. Then in terms of the population by sex, as I mentioned, we'll be able to aggregate this back to the population figure. So again, when we look at the population by sex, we have 48.5% of those who have been analyzed are males, 51.5% are females. Then in terms of the residents, again, majority are in the rural areas, so 59.3% were in the rural areas and 40.7% of those interviewed were in the urban areas. Then administration, again, is done in both English and Swahili, and where we have respondents who do not understand the two languages, we move on and interview them in the language that they will be able to understand. I want to move straight now to the various dimensions of financial inclusion. As I mentioned, we have 4 dimensions of financial inclusion. We have access dimension, we have the usage, we have the impact, and then we have quality dimension. And lastly, we'll be able to take you through the emerging issues, what's new in this survey. And I would request that you wait until the last slide where you'll be able to see what are the emerging issues, what is it that we've been able to do different from the previous surveys. And you can be able to see that for the first time, we are able to analyze these statistics along the green investments, and we also have some disability indicators which we'll be able to project. Now, when we talk about access, we want to bring to your attention that the level of financial access has grown. And we are seeing the financial access increasing to 80. I request that you move the slides. You will see that when we are discussing the results, we are looking at financial inclusion along the formal, the informal, and the excluded categories. And therefore, when you talk about the financial access, we have formal financial inclusion, whereby we look at formal prudentially regulated financial products and services, the non-prudential products and services, and we also have the formal registered. And when we talk about formal, we are able to talk about financial sector providers now providing oversight and regulatory mechanisms for those products under their purview. For example, when you go to the Central Bank of Kenya, we do license the digital credit providers, we do license and regulate the commercial banks, so those ones are prudentially regulated. We also have the mobile money, again in the ecosystem, which was introduced in 2007, and then we also move to the financial sector regulators. You'll find that we have capital markets, investments in securities, we go to the insurance. There are a range of products thrown our way by the insurance regulatory authority. Then we also have the SACCOs. Again, they are all covered here. We have deposit-taking microfinance banks, deposit-taking SACCOs. Again, all of them are able to support us in a way. So when we talk about financial access, we measure it along those three dimensions of formal, informal, and the excluded category. Now, for the informally included, these are, again, FSPs or financial service providers who are not subject to any form of registration. For example, we have the informal money lenders. We have the chamas, all those groupings which are not subjected to registration or regulation, but they have some organizational structure. We cover them under the informal channel. Then we have the excluded category. When you send money to the old lady back in the village, then we consider you to be, we consider if you receive money from someone or from a friend, then you're not subjected to any organizational structure. So we treat you as excluded. But if you are in an organized structure such as a chama, and then you are in a bank, you are borrowing from mobile money, then we consider you to be included. So when we measure access, again, we look at those three dimensions. And as I mentioned, please move to the next slide. So when we talk about the financial inclusion, we usually measure it along those lines. And as I have mentioned, the financial inclusion has increased to 84.8%, as you can see on the screens. Then we also have the informal usage. Informal access has also increased, as you can see, from 4.7% to 5.2%. We've also seen a decline in the population that is excluded, and it has reduced from 11.6% to 9.9%. And this is courtesy of the many regulatory changes that we've seen. For example, we saw the central bank introduce new legislation governing the licensing of the digital credit providers. We've also seen in the NSSF side the lifting of the injunction, and now we can see a lot more people getting registered for pension. We have also seen a lot of support in the market infrastructure, the growth in the agency banking model, the physical infrastructures in the commercial banks. Again, we've been able to see a lot of improvements in the ecosystem, and the government has been very keen to support the financial sector, and this has seen the numbers grow. More people now are getting comfortable with the financial sector, and they are ready to go to the commercial banks. And you'll be able to see when you'll be looking at the usage that even the number of people who are going to the commercial banks now, the bank branches themselves, the numbers are going up. And also we want to look at what are the factors that trigger this or lead to these improvements. So moving to the next slide, we are able to see in terms of the access by demographic, we see a narrowing of the gaps by gender and also by residence. So you find that from 2021 to 2024, we've seen the gender gap in terms of formal access has narrowed to 1.6, and we've also seen the residence gap. So there is parity, there is increase in parity between male and female access, and that is from 4.2% to 1.6% in 2024. And for the residents, the parity is observed where we have a decline in that disparity from 12.5 to 11.1%. And we are able to look at this, and when you get the data, when you get an opportunity to interact with the data, you'll be able to cross-tabulate this with livelihoods, with your wealth quintile, because we have again split the population into 5 wealth quintiles. So you'll be able to see by wealth quintile, by livelihood, whether you are employed, whether you are casual, where do you belong in terms of access. So that is in a nutshell. Then moving forward, we also look at when you look at the access by products, there are several products that we see here, and all these are covered in the 2024 FinAccess survey instrument. So we are able to establish the population that is using a certain financial product, the population that ever used and stopped using, and the population that has never used. And when we'll be looking at these results in a few, we'll also be able to see what are the drivers of this financial inclusion that we observe, and what are the barriers to access. And from what we can see, those individuals who indicate that they used to use, but then they stopped using at some point, they cited issues of loss of income as some of the reasons why they stopped using. But for those who have never used, probably they talk about affordability, so they probably are not able to afford, and that could also be related to the issue of income, the issue of relevance. So again, the market is encouraged to design products and services that are relevant and are able to meet the needs of the people. So what they said is that some of the products they are not using, they are not able to address their issues. Then the issue of awareness comes in handy. So financial literacy is very critical when it comes to making financial decisions. So when you are not aware of an existent financial product or service, then probably you are not likely to use it. So those are some of the reasons that were cited. However, for mobile money, it was mainly because of phone ownership. So they cited that phone ownership was a major drawback, and also lack of the registration document, for example, lack of an ID, that also was one of the barriers to access. Then when we move to the exclusion again, we are able to see in terms of the exclusion, majority of those who are excluded, when you look at it by demographics, you find that the youth, and particularly the rural youth, are actually the most affected in terms of access. So we looked at the exclusion by demographics, and as you can see from that chart, when you look at the age group, you look at the cluster type, you look at the wealth quintile, you can actually see that the 18 to 25-year-olds are actually top in terms of the exclusion by demographics. And you're also able to see that even in terms of the rural-urban divide, again, a good number of those who are excluded are in the rural areas. When you look at it along the wealth quintiles, the lowest quintile, and these are the people who are at the bottom of the pyramid, are again excluded. So we will be able to unpack this data again, but we also give you an opportunity to interact with the data and be able to triangulate and also try to cross-tabulate this issue of access, exclusion by various other categories. For example, you can even bring in the issue of religion. You can bring in the other nexus. So we have not been able to do everything. So here we just want to stimulate your appetite so that you know what is in the data set and you can actually be able to get in and interrogate it. I want to take you to the next slide, which is very, very interesting. This slide is very interesting in the sense that, as you may be able to see, in terms of the financial exclusion, you look at it along the residents, you are able to see that a majority of those who are financially excluded are actually in the rural areas. And when you combine the age group and also the residents, you see that the urban youth actually are the worst affected in terms of financial inclusion, and they account for 45.5% of the total exclusion in Kenya. And we wanted to understand what are the characteristics of this youth. Do they have ID cards? Are they eligible to join the financial system? What could be the drawback? What could be the driving force for this high level of exclusion among them, rural youth? And what we established is that if you look at the phone ownership, then you'll find that those who do not own any phone, 36.5% are actually in that age group. Now, when you look at the issue of ID, again, 51.5% do not have an ID, but out of the 51.5%, 47.2% are in that particular age group. So that tells you that when you talk about financial inclusion, it's very, very important to focus on this age of 18 to 25 years, because that's the time when someone joins the financial ecosystem, is the time you get your ID, is the time you register for financial products and services, and therefore in terms of policy, probably it's good to think of how best can this space of ID ownership, this space of phone ownership be improved to ensure that that population which is financially excluded is actually able to get that kind of help. And when you look at it even in terms of the aggregate numbers, you are able to see that it actually dominates, it occupies a very important role in the society, because the median age, again in Kenya, when you look at it, we have a majority who again fall within that age bracket, that is 18 to 25. So moving to the next slide, again, as I mentioned, this is just to stimulate your appetite so that you can interact with the data more and learn what is in there. We have, for the first time, been able to get a time series analysis at the county levels, as I mentioned earlier. Our first data point, we got it in 2021 at the county level, and now we have another data point that is able to tell us where are we in terms of financial inclusion as a county. And you can see from the screen that quite a good number of counties are actually doing well in terms of financial inclusion. However, when you look at the exclusion by county, you can see the divides. So it's huge. There is a huge divide between those counties which are highly financially included and those counties which are not highly financially included. And this second map is able to give you the exclusion by county. And we would want to understand, again, at these county levels, what is it that County A is doing that probably County B is not doing that has helped them to move. And in the next slide, you'll be able to see the changes now in terms of the financial inclusion over time. And if you take us to the next slide, they are here. We are able to compare now where the county was in 2021 and now where it is in 2022. And this information will be in public for you to look at the county where you come from, see what is it that your county has done that has helped the county to move in terms of financial inclusion. And there are counties which are still lagging behind, and probably is an area of interest even for policymakers to be able to understand what are the factors or what are these barriers that hinder access to financial services. But for the counties which are doing well, extremely well, probably it's good to have those exchange programs, even for counties to be able to learn what others are doing, and maybe they can be able to borrow from them. Is it largely supported by agriculture? Is it largely supported by business? Is it employment? So what is it that can be done through policy to ensure that, again, this is addressed? So this data is very rich. We are able to aggregate at county levels and at national levels. When you get access, you'll be able to interact with it. So we move to the next slide. And now we look at the financial inclusion across the countries, and we're able to see that Kenya also ranks highest. It ranks highly in the region, as evidenced by what you can see. In terms of financial inclusion, we have South Africa, which is near 100%. Of course, the objective of financial inclusion is to enhance universal access. And we would want to hit those highs of 97, 98, 99, and even 100 to ensure that no one is left behind, and especially those who are at the bottom of the pyramid. So these are countries which have FinScope surveys, FinAccess surveys. We compare ourselves with them, and we can see that Kenya has not been left behind. Even in the region, as you can see, it leads the pack and you can see Tanzania, Uganda, and other countries, again, lag behind. But we are making a steady growth in financial inclusion, and I believe that once we have even the National Financial Inclusion Strategy in place, it will be able to identify the gaps and now be able to close that gap and probably have an enhanced universal access. So next slide, we move to the issue of the usage. And this is very interesting, especially for the users of financial products and services. We want to see where are people going in terms of access, in terms of usage of financial inclusion. And when we look at the usage, we think along how frequently do you access your bank account? How many times do you access it? And what are the characteristics of that account? And we'll be able to see, even in terms of the frequencies. And these also will be able to see the reasons why people choose the financial product or service that they use. So, and we'll also be able to cross-tabulate it along the various demographic characteristics. So kindly move to the next slide. We'll start with this slide that talks about the various, the usage of financial products and services by provider. And we are seeing a huge increase in bank usage. Now, we tried to analyze the data, and we noted that quite a good number of people have gone back to the bank branches. People are patronizing the bank branches, people are patronizing the agency banks, and also this could be on account of a number of factors, including the huge interest even in government securities. We've seen the expansion of the banking infrastructure. And actually, if you look around in your neighborhood, maybe 1 or 2 years ago, we didn't have a bank branch, an ATM, or an agency bank. We could have them in the chemists, in the pharmacies, but today we are seeing more and more branches coming closer to us, and this has partly led to an increase and an improvement in the bank usage. For the mobile money, we've seen an increase, though at a decreasing rate. Remember in 2021, we had 81.4% using mobile money. But now we are seeing that the mobile money has increased to 82.3%, meaning that there is an increase. However, the increase is at a decreasing rate. So probably we need to understand again what is happening. Is it that we are reaching the point of saturation? But of course, we are also seeing when it comes to mobile money, there is a lot of integration of these financial products with mobile money. So you find for the insurance, they have their product integrated in the mobile ecosystem so that they're able to support people even more. When you look at the mobile banking, unfortunately, we saw a slight decline in the mobile banking. We also saw the traditional banking, as I mentioned, shoot up. But we also have the Fuliza and the Bustika. These overdraft facilities that come through your phone. We've seen a flattening in terms of their usage. But what is interesting, ladies and gentlemen, is the Hustler Fund. You will see this is the first time that we are reporting on the Hustler Fund, but we're seeing 28.9% are already on the Hustler Fund. We've seen an increase in the SACCO usage, and I believe the CEO is here. The SACCO usage has improved. We're seeing an increase from 9.6 to 11.7%. Investment usage has also grown. I've also seen there are a number of products which are thrown through the digital platforms, such as CHUMS, again, which support this growth in the investments. For the MFIs and digital apps, and I think the Deputy Governor already mentioned this, for the first time we have the digital credit providers now falling under the purview of the central bank, and we've seen these regulations are supporting growth. The MFIs have been able to grow, and these include the digital apps, have been able to grow from a low of 1.7 to 8.8%, and this is remarkable growth, meaning that, again, people are getting more and more comfortable now with the digital credit providers since the new regulations were issued. For the insurance, this is an area that requires a lot of investigation to understand probably why. Next slide. So this slide, as I mentioned, when we talk about usage, we also talk about ecosystem on a daily basis. But what was also interesting is the informal groups. We also find the informal groups are more active, maybe they were meeting on a monthly basis. You'll be able to see how frequent, slide plan, next. Then we also looked at the issue of distress, And the report, the 2024 FinAccess survey, is able to bring out this quite clearly. And this data corroborates with what is on the supply side. We established that the debt distress has increased from 10.7 to 16.6% for the adult population. And this number, again, matches what is on the supply side. We've seen non-performing loans growing over time, but we've also seen some actions by the central bank, which are supporting the economy in terms of reducing the exposures through debt. And this, when we look at the debt distress, we look at whether you either paid late, paid less, or you failed to pay at all. So when you combine all those indicators, we are able to come up with that debt distress indicator. Next slide, please. Then we look at the strategies that you employ to repay debt. And what we established again is that indebted households are often forced to either cut down on their expenditure, such as food, maybe they run down their savings, or maybe work more. So those are some of the measures that they take. And when you interrogate the data, you'll be able to see all this and put it into perspective. Next slide. The consumer protection that I did mention about, we developed a heat map which is able to summarize the issues by the service provider, and also we can see in terms of the microfinance, that is the traditional microfinance institutions. Remember, before the DCP regulations came, there was a lot of many issues surrounding the market conduct, practices, and consumer protection issues, and these issues have been picked. Issues of unethical practices were found to be quite pronounced in the MFI, the traditional MFIs, and also in the digital app loans. Remember, these digital loans are the ones which graduated now. They are under the digital credit provider regulations, but we still see a number of issues coming out, things like unethical practices in the operations. System downtime was reported also. But when you look at the banks and the SACCOs and the others, you find that those issues are near zero, meaning that for most of the financial service providers, they're actually able to deal with most of these issues of system downtime and stuff like that. So this consumer protection, we also extended it to the other spheres, the securities, the insurance, the pension, and as you can see, these are the main issues that surround the insurance space, the pension space, and also the securities. And you can see for the securities is inability to transact due to system downtime. When you go to insurance, is the delayed insurance payments. When you go to pension, again, the delayed payment of pension. So these are some of the issues, again, for us to pick as policymakers, as players in the industry, and see how best to deal with them. Moving to the last dimension of inclusion, we look at the impact, and here we look at the life priorities. What priorities have people set for themselves? Do they have a plan, probably for education, putting food on the table? And what came out is that education for the first time has overtaken food as a priority. So people are prioritizing more education as opposed to food. Probably this could be on account of the decline in inflation. So the food inflation has been going down, and that is a pointer that food is no longer a big issue. Although it's one of the items mentioned there, is no longer a big issue. The main priority for the households is actually education. Food vulnerability has decreased. Now, when we move to the other measures where we look at the impact, we look at three main objectives: whether you are able to meet your day-to-day needs, whether you have experienced shocks, and whether you are meeting your future goals. And what was interesting is when you look at the main shocks in 2024, the main shock was actually health. So there was a main health as a main shock. However, we see it has declined slightly from 2021. Remember, in 2021, we had COVID shock, which was a health-related shock, probably which accounted for the increase in the health as a major issue. It is still an issue, and this could be because of the huge bills families and individuals are struggling with at home. That is an issue. We also have climate shock as an issue, but not so much pronounced as health. Then we also have, back to the previous slide, we also have the loss of income. You can see the loss of income has 15.9%. So for the first time again, people are very conscious about incomes, people are very conscious about wage cuts. So this is coming to them as a shocker, and we'll be able to see how policy can be used to intervene and support the market. Next slide, please. And we also look at what devices, because we have identified the needs that these people go through and what they have set aside for themselves. But then, what are the tools, what are the devices that they use to address the day-to-day needs, the shocks that they come across, and also the future? And we are able to see that reliance on informal financial solutions for meeting day-to-day needs and also dealing with shocks is more pronounced. And people appear to embrace social networks. People try to go to the informal channels to address the various needs. So it's a challenge to us as financial providers. We see how best can we be able to support the households in terms of meeting day-to-day needs, coping, dealing with those shocks, and also meeting future goals. Next slide, please. Then we look at the financial health. And when we talk about financial health, we are talking about three broad categorizations. And one is your ability to manage day-to-day needs, your ability to cope with risks, and also your ability to invest in livelihoods. What was interesting enough is that when it comes to financial health, a majority are prioritizing the day-to-day needs, and also the issue of coping with risks. So whenever you are confronted with a shock, you will not wait until probably the following day to deal with the shock. So you have to confront the problem there and there. So priority for the consumers is actually to address the pressing need, that is a day-to-day need, and the other objective is to address the shock that probably befell your family, be it a health shock, be it a climate-related shock, or if it is a loss of income. But we are also seeing a dip in terms of the population that is investing in livelihoods. And this can be corroborated with what we presented earlier, where we said that the savings have been on a decline. So savings have been on a decline. We've seen people borrowing more. And even the chart on frequency, we did see that there is increased daily usage of mobile money, daily usage of mobile bank, meaning that people are prioritizing day-to-day needs as opposed to investing in the livelihoods. And that explains why the financial health measure along those two dimensions has gone up, but for the investment in the future, we've seen a slight decline in that. And the overall financial health has improved from 17.1% to 18.3%. And that is largely driven by the ability to deal with day-to-day needs, coping with risks, and less on investing in the future. So next we look at the issue of course, there are emerging issues, emerging concerns. We looked at the data and wanted to understand what percentage proportion of the population is investing in green. And what we established is that close to 35% of the population is investing in green. So we now have green investments, and there has been a protracted campaign by the government to come up with programs and policies supporting green finance. And we can see that quite a huge number of people now are participating in the green investments, and particularly solar. We've seen a lot of asset finance products, again, supporting the solar, and this, again, in a sense, helps in terms of supporting the nation with greening the environment. And most of those green investments, again, they come from social networks. We find people pulling together, planting trees, community kind of engagements, not forgetting the support from the government. And lastly, we look at the persons living with disabilities. We were able to work very, very closely with those agencies, the national agency that handles persons living with disabilities. And what we established is that, again, in terms of the financial inclusion of persons with disability, it trails persons living with disability in terms of formal access. The number trails the national average, which is 77.9% of them are formally included. But we also looked at them along financial health, and we found again the level of financial health for this particular group of people. This is a very important segment of the population. Persons living with disability, their financial health remains relatively low. What can be done to improve their financial health? What can be done to improve their access to financial services is a question for us to be able to interrogate. And of course, when you look at subsequent surveys, we may want to bring on board issues of forcibly displaced persons. We also have refugees in camps. These are people who may want to be financially included, but we don't have data to support that kind of policy message. So we may want, going into the future, to come up with measures that can help support and come up with data to support the forcibly displaced persons. So we move to the next slide of conclusions, and the main messages that are coming out of this is that, as you have observed, the traditional usage of financial services has gone up. We've also seen a persistent exclusion rate declining. You saw now we are talking about 9.9% exclusion rate, but dominated by the rural youth. So this is an area that needs to be looked at so that we are able to address the issues affecting that population segment. Mobile money remains a key driver of financial inclusion. Anytime we see mobile money growing, there is a tendency of financial inclusion growing in a sense. And what we don't want is a situation whereby mobile money will stop growing, then the gains of financial inclusion will start being eroded. So again, is an area we need to focus on. Then in terms of the barriers, we did mention the issue of affordability. We mentioned the issue of awareness. We did mention the issue of relevance. There was also the ID ownership and also the issue of the eligibility, the phone ownership and the ID ownership. These are areas that need to be addressed. Probably we need to come up with cheaper phones, cheaper smartphones, which can be able to support the youth, most of them who are techno-savvy. And lastly, we observe gaps in financial literacy. They still persist. But more importantly, it's important to think about the persons with disability. It's also important to think about the forcibly displaced persons. And in subsequent surveys, we do expect that these will be covered in the survey. Thank you very much, ladies and gentlemen.
Thank you very much, Dr. Isaac Mwangi. As you can tell from the depth of his presentation, including me trying to hurry him along, just how much data there is in this FinAccess household survey. And I've been promising you there are ways for you to interact with it. And the best person to demonstrate this to us, and I want to invite him right now, is Rajab Mbaruku, who's the head of IT at the Kenya National Bureau of Statistics. He'll just do a little intro, because trust me, you'll do this for weeks on end, playing around with the data, but Rajab is able to tell us exactly how to start that process of being able to interact with this data much deeper.
Thank you. All protocols observed. I want to congratulate Dr. Isaac Mwangi for the master class. I would say that I've learned a lot, and if I was to change my PhD, I think I'll now change to this. And I look for him. We as KNBS, I think we've come up with a site where we can actually see all these products, what he has been talking about. And we'd like to help everyone to understand and maybe do more of those insights that Mwangi has been talking about. So we have developed this site, which we are calling the FinAccess.knbs.or.ke. This will assist you to be able to visualize the various dimensions he has talked about. So you can see the access dimension, usage dimension. If you scroll down a bit, you'll see the quality, impact dimensions in one page. So it is like a summary that you'll come in and find various tools that you can access. On the side, you'll also see a menu where you can see access having been drilled down to use of sharing savings, use of insurance funds and pension. Quality also, you'll get financial health, gender gaps, and all that. So if you can delve into maybe access, just click on access so that we get into see what is there. There's a whole page that is dictated on access, definitions, and also some visualization that we have done for you here. Yeah, so you can see we are trying to follow the trends from 2006 up to 2024, and you can actually visualize and see how access has been developing from 2006 at 27%. Now we are at 85% in Kenya. We've also done for you some line graphs, which will show you the growth and also the areas that are going down. We have also broken this data into county and sub-regions. Yeah, so you can see how your various counties are improving. Yeah, I've seen my county there, and I think we are not badly off. And also you can see how, the least county in terms of access and the greatest county. And of course, when you click on any of those counties, you'll be able to see more data. If you scroll down a little bit, yeah, that's the data you can see. You can also see population in the informal area. You can also see how they're receiving. So with the West Pokot having the highest and Mandera having the least. And you can also touch on any of those ones to get to know where your county is. Yeah. So this is in a nutshell. So when you come to exclusion, same thing. So we've also done for you, and you can see different counties at different places, with Turkana having the list at 31, and Nyandarua at 39 or something. Yeah. So all this, again, if you wanted by sub-regions, yeah, we've broken it down for you very well. And then if you like to get more data and all that methodology, you could go to the data sets. Just scroll on the, yeah, there is reports and data sets. So in this area, you'll be able to get all the materials that we use during this data collection. Yeah, so we'll have them here. Click that. I think it's coming slowly. Yeah, there you are. So we have for 2024 all the materials that we used. If you like to compare with what we had in 2021, you can also get up to 2006 down there. Yeah, so all the materials that we've been using during this particular surveys are all available for your use. So if one of you is interested to do a PhD like myself, here you are. Kila kitu iko. Thank you.
So as promised, if your area of interest is geography, so you want to go county by county, you have the ability to do that. If you want to break it down by age, if you want to break it down by sex and gender, almost any dimension that you can think of. And as Rajab says and Isaac said as well, if you then want to cross-tabulate that, you know, what's the inclusion among women in Kajiado County, for instance, and so on and so forth, you actually have the ability to do this yourself, even if the direct part that you're looking for is not in the report, but you're able to dig down as deeply as you want. And I believe you can also do it across different household surveys, so 2021, 2019, going back quite a bit. So it's actually one of the reports that we are proud of because of that element, because you're able to see the particular thing that you're looking for. And as Rajab says, if you want to then pursue your PhD based on the data that is in the FinAccess household survey, or that triggers something in you, we do hope that this leads to much better and deeper knowledge. So we are about to get into the speeches by our CEOs, but before we do that, I'll perhaps open it up for maybe a minute or two in case there's anything that has jumped out at anyone. I have a very distinguished panel of people who can answer your questions, not just Dr. Isaac Mwangi and Raja, but also Professor Mondida from the CBK, Dr. Amrik Haya from FSD, and Collins Omondi from KNBS. So in case there's anyone who has a question at this stage, we can take one or two, literally one or two, and there are microphones that are available to you. So if you want to put your hand up, that you want to do this, or if you want to play with that data for a bit longer and then come and ask your questions, these people are all available. So at the very back of the room, I'm following where Katunge is walking. I'm not sure where she's going. Oh, there she is. Please introduce yourself by name and institution, and then we see whether they can get an answer for you.
My name is Otiato Guguyu. I run a digital platform called Oral East Africa. I have two questions. One is it's on the decline in savings. We have seen the cost of funds go up in recent times, mostly because of the interest rates pressure. But now we are seeing from the survey that the savings actually went down. So is the governor concerned with that being impact of that on the cost of money? My second question is on the access, lack of access because of ID cards. What is the authority's response to the fact that ID cards are sort of blocking half of Kenya's demographic out of financial access? Thank you.
Otiato is a former colleague from the newsroom, so I notice he's very clever in saying, is a governor concerned? He's not part of my answering panel, but don't worry, he's going to come up and make remarks, and he may choose to answer that. But is there any other questions so we can take from our panel an answer to Otiato's question? So perhaps Professor Mundida, Amrik, or Collins, I know Amrik is dying to answer those questions, or Prof. They're sitting together, so between the two of you, whoever wants to take that question.
Yeah, thank you very much. Yeah, first one has to think about what could be driving the decline in savings, because that's interesting, especially given that shocks actually declined. Shocks declined from the past survey to this one. So could be a number of factors. Of course, the main one that's come out is focus on day-to-day, increasing focus on day-to-day transactions. So if you're dealing more with day-to-day transactions and the amount allocated to that has actually gone up, then you have less to put aside. I would also propose probably consumerism. There's more consumerism than probably was the case before. So with many new products coming up of different types, that has enhanced probably consumerism to some degree and made people more focused on that as opposed to putting aside. So that could also have played a role. Of course, because you also see increased household indebtedness as a key feature of this particular survey, then as you become more indebted and probably you take on more debt to repay previous debt, then you're less able to put aside because you're also repaying previous debt. So I think there are several drivers probably that could explain this, and one needs to look at this probably in more detail. Is there concern about this? Yes, there is concern about this because savings are also important in the process of financial intermediation. Also at macro level, savings have been struggling as a percent of GDP. So definitely there's an interest, and from a policy point of view, you'd want to actually be able to mobilize more savings domestically. Then you have to raise less from external sources. So it's something that one needs to look at. I think more recent, let's say, innovations, interventions need to be thought about, for example, from behavioral science. So behavioral science offers a number of interesting ways in which savings can be increased. For example, by nudging people to be able to save more through text messages and different ways, increasing financial literacy. I think there's a very important policy implication for financial literacy as well, and this is an effort that we're working a lot on. also within the context of the financial inclusion strategy that a lot of work is being done on at the moment. So I think it's a critical area. Certainly it's something we need to think more about, and we'll dig into the data more to see what insights we can get on this.
Thank you very much, Professor Modida. And yeah, so we're coming there. But Otiato as well, I think it's also an invitation to you and members of the profession to actually now take this as sort of your starting point to dig deeper yourselves, because you're welcome to go into the households, have those questions. I like the question about IDs, because it's sort of the primary document and primary tool before which you can do anything. You can't open a mobile money account, you can't open a bank account, you can't operate on the most part, because as it's supposed to be, if you go and want to transact at a mobile money agency, you're supposed to show them an original identification card. So if you have 50-something% of people with a problem. But I do welcome members of the media who are here and also watching to actually dig deeper into this question. There's a gentleman there with a question as well.
Thank you so much. My name is Geoffrey Nyamau. I serve as the country manager at Asili Africa in Kenya. Yeah, so thank you so much. I just want to appreciate that very detailed presentation. Now my question is, considering the fact that mobile money, is dominant, but then in terms of the percentage, looking at MFIs and including digital credit providers at 8.8%, how does that, sit in? Because, I mean, the expectation is MFIs and, expanding that to cater for digital credit providers, then the expectation should be that the percentage in terms of penetration should be much higher, compared to where it sits today. I just needed some, clarity around that. Thanks.
Thanks, Amrik.
Yeah. I also get surprised about the fact that the digital credit numbers are so low. One thing to note is that we've seen a huge increase in uptake of buy now, pay later solutions, which I think is quite interesting. That's one of the striking statistics actually from 2024. There's been a big rise in, I guess, what these forms of asset finance could be linked also to the point on green. But I also think, people struggle with the digital credit apps. I mean, we see people we've seen from the consumer protection data that people struggle with things like unethical practices, with system downtime and so forth. So that may be part of it, but I think we're going to see this space growing because I think there's a lot of potential for innovation in this space. And Wallace, you just alluded to the nudging Prof alluded to the nudging and the savings behavior. I think there's a lot of ways in which digital apps can nudge, more responsible forms of behavior. And so we're really looking forward to seeing what's going to come out of this space in terms of innovation now that we've got the regulators sort of working together with the industry here.
Yeah, and just to remember that DCPs, digital credit providers, were brought under the ambit of the Central Bank of Kenya, just about 2 years ago. And so all that is starting to consolidate in terms of good behavior. I think all of us have seen where they used to be, the sort of very unethical behavior they used to have. So hopefully now that they're better controlled, that could actually change the scenario. So because we want to give ourselves the opportunity to interact with the report and also to finish this in good time, two quick ones. One is you have seen this piece of paper that's been put on all your tables. This contains a QR code. If you scan a QR code, you're able to get the full report onto your device. So you can do that, but if you want to follow it as well, you'll see it on our website. It's just getting uploaded as we speak. That's for the Kenya National Bureau of Statistics, the Central Bank of Kenya, and FSD. So you're able to see the report there. But with your permission, ladies and gentlemen, I want to invite now the CEO of FSD Kenya, that's Ms. Tamara Cook, to give us just a bit again of detail and flavor into this. But if you have questions, please keep them. Like I said, we'll have people available that are able to answer. But for now, Tamara.
Thank you, everyone, for joining. It really is an honor to be here. My team knows that FinAccess is one of my very favorite things and one of my favorite launches that we do. As we continue to kind of start this conversation around what do we do with this data now that we've got it, the theme for my remarks are what could change. And what could change means what can those of us in this room who are online do to change things for the better so that the future of finance in Kenya can be better? What could change that's outside of our control, whether it's climate change or it's new opportunities? What is changing and how does finance adapt to really meet the needs of Kenyans? I don't have a clicker, so I will say click when you want. I would like you to go to the next slide. Before I get to what could change, I think it's important for us to take a step back and really appreciate those who made this survey possible, and that is the enumerators. The leadership of the three key FinAccess partnership, the KNBS, CBK, and FSD Kenya, we visited this training of all the enumerators. These are the ones who made this possible. And when we spoke to them, we talked to them about how important it is to get this survey right. It's hard to convince people to give up their time. It's hard. And so, we said, look, if you can get this data, then we promise you we will use this data to make good policy changes for Kenya. And so please join me in appreciating the enumerators who made this survey possible. My team also volunteered to be some of the testers of FinAccess. You can see at the bottom, this is me being interviewed. I promise my data is not actually in the report. It was just for a test. But really to help improve the survey and help us get to know the survey better. I think it's an important part. And you can see this is the device that they use to collect this data. Next. I had the honor of observing surveys being administered in Nandi County, Kiambu County, and Nairobi. And again, my respect for the enumerators just grows so much. You can see in the bottom left the man literally climbing through a fence in a tea field to find a household. That is what it's like. Whether rain, shine, uphill, downhill, they really do find Kenyans where they live so that we can understand their financial lives. Often the enumerators are standing during an entire interview because there's no place to sit. They're lucky if they can find shade. This was like really finding the one place of shade in the garden that we could do the survey. And I heard beautiful stories from households that don't quite come out in the data, right? It's a little bit more of that qualitative flavor. I heard people saying, yes, I have a SACCO account, but what they then said is, and I love my SACCO account. I love being a member of a SACCO because this SACCO gives me affordable credit. It gives me relationships with my neighbors, and I've been with them a long time, so I trust them. I heard this particular, in the very bottom, we couldn't find this guy. You heard about the statistical analysis. The survey, the household's picked randomly, and then the person is picked randomly. And this young gentleman was not home, and we're like, well, can we call him? No, why not? Well, he sold his phone because he had defaulted on a loan, and he didn't have a phone anymore, so he'd lost all of his financial access. But we found him on a construction site, convinced the overseer to let us interview him there. And importantly, we found him without the phone, but also we found him before he got off work, which his mother told us would result in drinking something that might make the survey results less, anyway. So that's just to give you a flavor. We've got a woman holding her baby the entire survey, right? Not only do we want to thank the enumerators, but we want to thank the 20,000 plus people who gave their time to get this data. So can we appreciate them? Next. You've seen a lot of charts already, so now I'm scared to show you some more. But I'm going to just take you through a couple of things to give you a flavor of what we can do to say, hey, what can we change with this data? You've seen the FinAccess thing. The one thing I want to point to is over on the right. And I've only put mobile money and banking up here. Mobile money is plateauing. And to figure out how to get more people to reach that kind of on-ramp of digital financial services, what is it going to take? It's going to take getting more IDs, it's gonna take getting more phones, it's gonna take finding out what the barriers are to these households who are not yet using finance. But what we see is that mobile money has enabled dramatic growth in banking, for example. We're over the 50% mark now. We've also seen the digital app, the fintechs, the other things that are growing. And so how do we both increase that mobile access, which tends to be a non-ramp for people, and then how do we use that to enable more people to use additional financial services beyond payments and storage? If we can go to the next one, we've also already heard about financial health from Dr. Mwangi. He did a great job on this. The thing that I want us to double click on is this orange line. And sorry for those of you who may be blocked by this, but in 2021, we saw an uptick in those who are investing in the future. My personal hypothesis is when COVID happened, people were caught off guard and they hadn't anticipated the shock. And so they started to invest a little bit more to make sure that their future might be safe for future shocks. But what we're finding today, and we've heard this referred to by Dr. Mwangi, is that as people have learning how to manage these shocks and deal day to day, they just don't have any money left to invest in the future. Or the financial solutions that are available to them aren't affordable or appropriate to help them accumulate that type of capital that will enable them to have patient capital, affordable capital, fair capital to invest in the future. And so what can we do to see this 17.1 move up into the range of these 50s that we've got in the others? Moving along quickly, I'd like to double click again on this financial health and look at what one of the biggest drops that we saw was with business owners, micro and small enterprises. Their financial health went down. And the biggest reason their financial health went down is because of this dark red arrow, where their ability to invest in the future dramatically dropped from 63% to 24%. And one idea, one hypothesis around that is that because they're doing so much just to keep their business running day to day with the economic situation that we face here in Kenya, they're not able to make those longer term investments and invest in those longer term opportunities as micro and small enterprises. Moving along, I want to deal with this health shocks. And one of the things about this data is there's lots of ways to cut it. So you heard Dr. Mwangi say that health shocks actually went down a little bit, and in my graph, they're going up. Why is that? He was talking about the main shock. So people saying that health was their main shock has gone down a little bit. But in terms of how many people have experienced a health shock, that continues to go up across urban and rural areas. And what we see is time and time again, the way people manage those are through the assistance from friends. That is not a financial solution. It helps. Social networks are important. Financial payments can help make that happen. But what could we do to get more valuable health insurance into the hands of people so that when they do have a health shock, they don't have to rush to do a Harambe right away and they can really meet those needs? And obviously the public policy with social health insurance is trying to address some of this. And so we will hopefully be able to use this data and some of the other data we're doing on health tracking to inform those policies around health. Moving along, Dr. Mwangi pointed out that one of the persistent gaps that continues to remain is this rural-urban divide. And the left side shows that that's where it is. On the right side, I've got two kind of series of charts that are trying to say, why might this be? One is of a dramatic difference in smartphone, mobile phone usage between urban and rural areas, and also 3 times more likely to have problems with the network. So even if you do have a phone, can you access it in those rural areas? But perhaps the most important one is at the bottom. The percentage of those in the bottom 2 wealth quintiles, the poorest, are more likely to be in the rural areas than they are in the urban areas. And so without the financial resources or without that wealth, or maybe without the economic opportunities to pursue that, they are just less financially included and less financially healthy. So what can those of us in this room do to work together to create financial solutions that can help address the issues of rural poverty and wealth creation and economic development to help kind of narrow this gap between rural and urban in the same way we've seen a really exciting narrowing of the gap for women. Dr. Mwangi already presented some of this on the rural youth, but I think it is really interesting to contrast rural youth and urban youth. So if you look at the kind of, oh, please move to the next slide. It moved on my computer. If you look at the difference between the turquoise and the green bar, in every category you see that urban youth are doing slightly better, sometimes dramatically better than rural youth. And youth in general are doing worse off than the rest of the population. And I think we all are aware of how important it is to help people come into the financial sector, to find those economic opportunities, and for finance to help them unlock those economic opportunities. Again, we've heard this over and over again, but this lack of ID and this lack of phones is part of the driving around that. If we can move to the next one, it's on phones. Anybody who's seen me present 2021 FinAccess data knows this is my favorite slide. And it's showing you how many people in each county, so it's not percentage, just as a number of people have a smartphone, a non-smartphone, use someone else's phone, or have no phone. And it's still true in 2024 that there are more people in Nairobi with a smartphone than there are people in any other county. And if we look around this room, you all have smartphones, right? And we forget that not everybody else in the country does. And so that limits their opportunities to access some of these more value-adding financial solutions that can be done over a smartphone. But what we do see between 2021 and 2024 is an increase in the number of smartphones, which increases the opportunity. And we're now above that 50% mark. We're at 51% of adults who do have a smartphone. So since I love this chart so much, if we can go to the next one, I asked the team to put together this, this chart, which is looking at formal access by county. And you can look up there and you see a lot of dark blue, and that is something to celebrate, the percentage of those who are formally included. And you see lots of little slivers of green and gray, right? And for us to address those who only have informal and those who are excluded, it's going to take us working across all of the counties. Because if you added up all those little green and grays, it's quite a lot of people, but they're spread across a lot of different places. One just fun thing to remember, fun but actually a little depressing, is that the top county is Nairobi at 94% financially included, and the bottom county is West Pokot at 49%. They're literally reciprocals. And it tells a story of two completely different situations when we think about formal finance. And so I look forward to engaging with county leadership and regional blocks to look at some of these endemic challenges. Moving right along, we've already heard about the green investment that's really shown a bright spot. And I think one bright spot in the rural areas is that the rural populations are more likely to invest in green than urban. Perhaps there's more opportunities for smart farming, or they're less connected to the grid, so they need options like solar, but 41% of those in rural areas are making some kind of green investment. And one question that I have for us in what can change is how can we use this as an opportunity and build on it to look for green economic development opportunities, especially in rural areas with the onset of climate change and the reality that we're facing. Moving right along, this was my second favorite chart to present in 2021. So if you look at the bottom first, this shows you the gender gap by county in 2021, the first time we could measure this. And in 4 counties in 2021, there was a higher percentage of women who were included than men. And that always surprised people. In 2024, there are 20 counties where the percentage of women included is higher than men. With that gap coming together, it's really interesting to look at. So I double-clicked on just one county, Nandi County, where I was able to observe some of the FinAccess surveys. And you see that basically the percentage of men who are included hasn't really changed. It's changed by about 1%. But the percentage of women who are now included in Nandi has grown from 75% to 93%. And what I want to know is what happened? Why are so many more women being brought into the financial sector? Was it the opportunity? Was it that they got phones? What can we learn from that so that we can bring even more of those excluded populations in? And now that they've been included, how can we also see them using more value-added financial services and increase their financial health? Moving right along, we talked about how the savings is dropping for the first time, and there's already been a bit of a discussion around that, and I think it's something we're all going to want to query. Kenya has a very strong savings culture, and so I think it's disappointing to see this dropping off. I do think that it probably is linked to that difficulty of dealing day to day, and therefore not having that extra little bit of money to put aside for whatever's needed. And that may be one of the reasons that savings is going down. But one bright spot that I'd like to highlight is in these green squares over here, you can see that both mobile banking and banking as a source of saving has significantly increased since the last survey. And so people are putting more of their savings in formal mechanisms. Hopefully that's because those formal mechanisms are better meeting their needs than they used to, or maybe giving them a bit of a return and providing that safety. Also, we see that when people save in more formal mechanisms, it unlocks other opportunities, such as credit from more formal mechanisms. And so that is one bright spot, even as we wonder about what's going on as the savings rate drops. I'm almost done. Let's turn to credit quickly. We see that credit remains strong and continues to keep going up. The Hustler Fund is the highest percentage of people who said yes to the Hustler Fund. In the interviews I was able to experience, most people who used the Hustler Fund had maybe used it once. My gentleman who lost his phone, he had used it 3 times, but once with his phone, once with his daughter's phone, and once with his mother's phone. And so the numerator was like, I don't know how to record that bit of data. And so it's something that we can continue to query. How is that working for people? What is it doing for them? How is it helping them on all these credit? Amrika already mentioned how buy now, pay later has really increased. But let's not forget that debt stress has also increased. We cannot ignore that. So what could change? More robust credit scoring that enables people to, the credit providers to provide the right kind of credit, the affordable kind of credit, the right term of credit, so that those who are borrowing are better able to repay. Credit information sharing that tracks this, credit guarantee schemes that help people when they're failing to pay. And then this is my last slide on charts, and it's really another double click. You know, at FSD Kenya, we're so passionate about women's financial inclusion, and so always looking at what are these gender differences between men and women and when it comes to finance. And we see that women continue to use informal services more than men do on both credit and on savings. And I think it's just a question for us. There's nothing wrong with using informal services if they're providing value, but what can the formal financial sector learn from the value that informal provides to improve the offering to formal? How can the formal sector attract more women into their services beyond what they are currently doing? So my closing slide is really a question. How do we find our way from here? I chose this photo. This was a team from the FinAccess team kind of wandering through a field. The GPS told them where they needed to go, but of course there was a fence here and a block there, and so we had to kind of find the right way. And that's where we are today. There are many paths we could take from here to try to improve financial inclusion for Kenya, to try to address some of those gaps that are persisting. How do we find our way from here together? Before the event started, the financial sector regulators, National Treasury, we were together, and we were talking about how this data can be used to inform the medium-term plan for the financial, that contributes to Vision 2030, that can inform the National Financial Inclusion Strategy that the Deputy Governor mentioned earlier. And really, how can we use this to ensure that as we go from here, we use this data not just for fun charts and interesting conversations over coffee, but to make real policy change that will impact the lives of Kenyan businesses, women, farmers, micro and small enterprises, and youth. Thank you very much.
Thank you very much. That's Ms. Tamara Cook, the Chief Executive Officer of FSD Kenya. And I'd now like to introduce and welcome the Director General of the Kenya National Bureau of Statistics, Mr. Dr. MacDonald Obudo. Karibu.
To our guest who is representing the CS cooperative Ministry of Cooperative and MSME Development, Bwana Obonyo, to the CBK Governor, Dr. Kamau Duge, my colleague and friend, the CEO of the FSD, Madam Tamara Cook. I've seen a number of my fellow CEOs from RBA. Charles is here. The Capital Markets Authority, Shamia is here. Peter Juguna is here from Sasra. I have colleagues I've worked with very well in this. Professor Mudida is here. Dr. Amrik Haya is here. And quite a number of colleagues. Good morning. Yeah, for me, I'm just standing here to assure you that what we have gone through has a lot of quality in it. But before I get deep into that, I really wish to mention that the young man who did the presentation here, I've really enjoyed the presentation, and you realize that even when the screen went off, he continued. Did you realize that? He continued. Dr. Isaac Mwangi, congratulations to you. He's a guy. You'll clap, just wait. You will clap. This young man started the FinAccess from 2006, the very first one. And at that time, he was a field data collector. He was a research assistant. And so he was on temporary basis at the time. And then he found himself inside CBK and all the series up to the 7th one. He's been part of that. Don't you think he could make good presentation? I think now we need to clap for him. It was really, yeah, that was amazing. You know, last year I made the presentation at the Kenya School of Monetary Studies. I was actually ambushed. And I'm sure it did not come out as well as we have gotten it here today. So for those of us who woke up early morning to come here, I believe you've gotten value for disturbing your sleep to come here and get the presentation. It is also very powerful what Tamara has done, giving insight out of that presentation, getting deeply into it and seeing the areas that we have changes. And what is it that we need to focus on? That has been done very well, and I really appreciate, Tamara, what you've done. Thank you. So with that, colleagues, I'm coming from the Kenya National Bureau of Statistics. And when we talk of that, we are talking of an agency that is the principal agency for the government responsible for official statistics. And as we do that, we are coordinating the national statistical system, which then brings together all the users and producers of statistics. In this case, we have worked very closely with the CBK and FSD, and now a number of partners coming on board, as you can see from the screen here, to ensure that FinAccess has been done very well. This is a process that we started way back in 2006, and we have been part of this process all along. And it was done in a statistical frame called the Kenya Household Master Sample Frame. And this frame has 10,000 clusters. So ordinarily, you call them enumeration areas, or if you like, a village. Every village, loosely speaking, would be an enumeration area. And you are shown at some point by Dr. Isaac that we have 108,000. This one arose from the census of 2019. So after every census, we would come up with a sampling frame, which then would be used for subsequent surveys for the next 10 years. And so in our current frame, which is the largest, it has 10,000 clusters, and out of that, we only took 1,885 clusters for this, and that is how we had, with every cluster producing 15 respondents, then we had a sample size of 28,000, almost 28,285. But then there are a few that were not eligible, a few households that were not eligible, and so the number dropped down to about 24,500. Now, within that, the response rate was about 85,000. I'm sorry, 85%. Now, that is really large, enough to give us estimates at all the domains that the survey was designed for. And so with that, you also realized that the other element that was brought on board was about the counties, that out of the 7 series of the FinAccess that have been done, 2 of them have now included counties. And so we have information about counties here for all the 47 of them. Then we have the national, then urban and rural. So that gives us 50 domains of estimation. Now, that gives us so much information. I'm not sure if COG is represented here. Because my next concern is not just the launch of the report, but how do we utilize the information? That becomes very key. How do we utilize this information that has been generated? The county government would need to use this information to ensure that the population down there is well supported, using the gaps that have been identified here. The national government would do the same, and various sectors would also require to use the same, so that what comes out of this process informs our well-being going forward. The publication looks small, but the data is big. And thank you, Rajab, for taking us through that and showing us that from the inception of FinAccess in 2006, we have the data sets sitting in our website and other websites where you are able to access that data and use it beyond what the report has produced. That becomes, again, very, very important. That the report does not have everything, but you can use it for several other reasons and purposes, so that we ensure that data is well mined. It is expensive to do it, and once it is available, make good use of it. Researchers, students, masters and PhD students, there's a lot of information here that would be very useful beyond policy formulation. And this is one thing that we stand for. So I'm really happy that we have had this. We are also working, as a Bureau of Statistics, we are working on several other surveys to be undertaken. And within a period of time, when we get indicators for different sectors, we are able now to revise our national accounts so that it gives a full reflection of the situation. The last one was done in 2021, when we got a lot of data set over a period of time. And so this one forms part of the series that we are targeting, that with the many surveys that we want to undertake, then we'll be able to ensure that there is revision of the national account to show our real position in terms of the GDP GDP, so that when we are comparing it with other countries, it becomes very easy. I saw the comparison that was being made here. I don't know it was on which indicator, where there was South Africa, there was Rwanda, there was Kenya, there was a number of Seychelles, there were a number of countries compared. That comparison is only possible if you're using the same standard. And that is also one other thing that is a mandate of the Bureau to ensure that standards, methods, and best practices are kept and used by all the players within the national statistical system. And so I'm happy that we are heading in that direction. Very, very soon, we are moving to SNA 2025. We'll be moving away from SNA 2008, which has been operational for a long time. Unfortunately, there are a few countries in Africa that are still in the SNA 1993. They have not moved to 2008, which we are now soon will be moving out of. So we'll be able to benefit in very many ways in statistical field to ensure that our country is well informed statistically. Colleagues, I'm ending this by thanking all the partners that have been part of this process. We value working together, and it is through this process that we are able to grow as a country. Thank you so much, and may God bless all of us.
Thank you very much, DG. It now is my honor to invite David Obonyo, the Commissioner for Cooperatives, who's here in his own regard, but also representing the Cabinet Secretary in the Ministry of Cooperative and MSMEs. Karibu sana.
Thank you, the organizer of this forum. I'm David Obonyo on behalf of our Cabinet Secretary, Wycliffe Oparanya, who was supposed to be here but could not be able to make it because of other pressing official engagements. And I want to read his remarks. In absentia, the Honorable Cabinet Secretary John Imbavi, the Governor for Central Bank, Dr. Kamau Tuge, all the other invited guests, ladies and gentlemen. It is indeed my privilege to join fellow Cabinet Secretary of National Treasury and other distinguished guests at this invitation of the Governor of Central Bank of Kenya, Dr. Kamau Tuge, to be part of this historic launch of the 2024 financial inclusion, which is dubbed FinAccess Household Survey. It is my first time, and I'm attending such a transformative event that I understand is the 7th in a row. The issue of access to finance and its Catholic role in empowering micro, small, and medium enterprises, as well as empowering citizens for the economic prosperity, is core to my ministry's mandate. The FinAccess survey reports bring value as a key reference document for our policy discussion to make our new policies people-centric. Ladies and gentlemen, my ministry is responsible for two key sectors of the economy, that is cooperatives and MSME development. And I'm glad to know that these two areas have been given a wide coverage in this survey, and the survey findings are crucial to enhance our policies to support their development. My ministry is responsible for key sectors. The cooperatives, which plays a very pivotal role in financial inclusion, that is deepening and access, which made the 5th administration to designate them as an enabler in the bottom-up economic transformation agenda paper. As of June 2024, the regulated SACCOs alone, which are 357, with a membership of about 7 million and asset base of 1 trillion, they accounted for about 6% of our GDP. There are many other thousands of cooperative societies serving other Kenyans in various fields, including housing, transport, and even in agriculture. Cooperatives are therefore a cornerstone of Kenya's economic resilience and prosperity. I know that the FinAccess household survey report has covered this area extensively and therefore provides a very useful data for the ministry. And I note that this year there has been a growth in the cooperatives, although from the survey I was able to see that savings in SACCOs was going down. And maybe this is an area, because I can see we have a team of people from cooperatives here. I can see our CEO from Sasra. I can see CEOs from some SACCOs present. Maybe it's a high time we need to sit and see why is savings in SACCOs going down rather than going up. Ladies and gentlemen, the other area of my ministry is on micro, small, and medium enterprise, that is MSME. And the government, through the bottom-up economic transformation agenda, aims to achieve economic turnaround and inclusive growth for investing in this sector. This one includes housing, settlement, agriculture, micro, small, and medium enterprises, and even in healthcare. MSME plays a vital role in our economy by generating jobs, creating wealth, and generating revenue and driving innovation. It is no doubt that MSME accounts for majority of the enterprise in Kenya and worldwide, making them a significant contributor to job generation and wealth creation. Data from the most recent National Economic Survey indicates that MSME constitutes about 98% of all our businesses in Kenya, by creating about that percent of jobs annually and accounting for about 3% of the GDP. Additionally, the sector creates employment for more than 15 million Kenyans with a value output of excess of 3 trillion Kenya shillings, making it a high priority segment in the realization of our government's pet agenda. It is against this backdrop that the government has laid emphasis on improving the operating environment to enable them to contribute economic turnaround and foster economic inclusivity, jobs, and wealth creation. Given the significance of MSME, hard to access funding become obstacle to poverty reduction and economic progress. Accessibility and affordability of credit are among the key hindrances to the establishment of the growth of the vibrant MSMEs. It is against this realization that the government launched the Hustler Fund, that Financial Inclusion Fund, to address these challenges by bringing millions of excluded Kenyans into the mainstream financial system for meaningful contribution to our economy. The personal financial products, which offers about 500 to 50,000 Kenya shillings at the interest rate of 8% per annum, has so far provided affordable credit to over 23 million Kenyans, with a total amount dispersed across 53 million in the last 1 year. And I'm very happy that as much as Hustler Fund just came recently, at least it has disrupted our financial system, and hopefully, despite of the few challenges here and there, it's going to transform and impact to our lives. I'm happy to know that this survey has dedicated topics on MSME and the Hustler Fund performance from the public utilization and the perception. We shall therefore sift through the data available and the information collected to identify the areas that we need to improve to make this sector a great success for the benefit of the common mwananchi. This will enable the government to ensure that about 99% of our excluded population from the formal financial system has been reduced, such that families, friends, and groups are able to access financial services from the formal financial system. This would uplift the people's well-being and therefore contribute to improved financial health score in our country. As a ministry, we will partner with the county government to champion inclusive financial for equitable and exclusive growth and development. We will leverage on these findings to craft policies that promote MSME to create jobs among the youths, women, and the poor for the better tomorrow. Further, we will use information to de-risk our MSME from traditional credit provider so that they can enjoy the benefits of our vibrant financial sector. And let us think of addressing the accessibility and affordability problem through embracing branded finance that leverage the private sector and development partners. I have in mind alternative finance models such as business angel investments, crowdfunding platforms, venture capital, as well as public equity to assist the perceived high-risk MSMEs. Thank you for inviting me to be part of this launch of the 2024 Finance Access Household Survey report that provides a rich insight for a progressive journey, prosperity, and inclusivity in our economy. Thank you. May God bless you all.
Asante sana. And now to bring this very distinguished morning to a climax, it gives me great honor and pleasure to introduce, welcome, and invite the Governor of the Central Bank of Kenya, Dr. Kamau Thuge.
Good morning once again. Mr. Obonyo, representing the Honorable Wycliffe Oparanya, the Cabinet Secretary, Ministry of Cooperatives and MSME Development. Dr. Susan Koech, the Deputy Governor of the Central Bank, the McDonald Obudo, the Director General, Kenya National Bureau of Statistics, Ms. Tamara Cook, CEO of Financial Sector Deepening Trust, Kenya, the Chief Executive Officers and heads of institutions present, and also my fellow CEOs and Financial Sector Regulators Forum. Ladies and gentlemen, good morning. I'm very delighted to host you today for the launch of the 2024 FinAccess Household Survey Report. The survey provides very useful information and data on the developments in the financial sector since the last survey that was conducted in 2021. Let me just take this early opportunity just to once again thank the CS for the National Treasury, but also the representative from the Ministry of Cooperatives for really accepting our invitation. I also wish to thank the CEOs, the heads of institutions, and all the invited guests for honoring our invitation. The survey report we are launching today, ladies and gentlemen, is a culmination of many days of hard work involving staff from the Central Bank of Kenya, the KNBS, and FSD Kenya. It was conducted across the entire country and benefited immensely from strong partnerships with key stakeholders in terms of both technical as well as financial contributions. I'm very happy to note that this consultative process has enhanced the scope and the quality of the survey. The 2024 FinAccess Household Survey Report is being released at a time when the global economy points to resilient growth driven by robust performance of the services sector in several advanced and some emerging economies. Global headline inflation across several major economies has declined on account of easing energy as well as food prices. However, global oil prices remain uncertain and volatile, reflecting geopolitical risks. In addition, financial conditions in advanced economies remain relatively volatile, largely reflecting increased uncertainties, especially over the new US administration policy direction and the disturbances in the Middle East, as well as between Russia and Ukraine. So global growth is thus projected at 3.2% in 2024 and 2025, compared to 3% in the previous year, 2023. Domestically, we have experienced macroeconomic stability. Kenya's economy grew by 5.6% in 2023, supported by strong growth in agriculture and services sectors. It is projected to moderate to 5.1% this year, before recovering to 5.5% in 2025, supported by resilient agriculture and services sector performance. The inflation rate remains well anchored within the medium-term target of 5% plus or minus 2.5, with the overall inflation at 2.8% in November of 2024. The Kenya shilling and US exchange rate remain stable, having appreciated by 17.4% since the beginning of the year, supported by inflows from remittances, offshore investors, and exports of tea, as well as horticultural products. The current account deficit is projected at 4% in 2024, as well as over the medium term. The CBK stands ready to take appropriate measures to ensure macroeconomic stability is sustained. Since the first baseline survey conducted in 2006, subsequent surveys conducted every 2 to 3 years have revealed significant progress in Kenya's financial inclusion journey. The 2024 FinAccess Household Survey, being the 7th series, indicates that 84.8% of the adult population in Kenya is now fully included in the form of financial services, from a low of 26.7% in 2006. In addition, the proportion of Kenyans excluded from accessing any form of financial services has declined all the way from 41.3% to 9.9%, while those that rely on informal sources of finance has declined from 31.1% to 5.2% during the period. This transformation is commendable. Beyond access, we have also noted improvement in the financial health of Kenyans in the 2024 survey at 8.3% compared to the 17.1% in the 2021 survey. We have also noted great milestones in reducing the gender parity gap in access and usage of financial services and products. The gender gap has narrowed from 12.7% in 2006 to only 1.6% in 2024, indicating improved equal opportunities for both genders to meaningfully participate in economic activities. These impressive statistics are largely on account of continued policy reforms by the government and other regulators to create a vibrant, all-inclusive, and stable financial system that serves all Kenyans. In addition, Kenya's financial sector continues to innovate for efficiency in service delivery and introduction of new products and services that suits the needs of the citizens. The adoption of mobile money technology in 2007 remains the most transformative innovation in Kenya's financial sector and has continued to drive financial inclusion. There are, however, opportunities for growth as indicated in this survey report. For instance, financial health remains well below the baseline level of 39.4% recorded in 2016. We can achieve this by addressing the bottlenecks limiting Kenyans' ability to invest in future goals by creating a conducive environment and attractive products to encourage savings. We also have an opportunity to bring the 9.9% excluded population and the 5.2% who rely on informal sources into the formal financial system, thus unlocking additional economic benefits. I'm happy to note the Central Bank of Kenya is taking measures to address some of these challenges. For instance, the rollout of the Dow CSD in July 2023 has enabled many Kenyans to invest in government securities from anywhere and at any time, thus contributing to financial inclusion. There are also ongoing reforms targeting consumer protection, enhanced public awareness and education, and improved service delivery. The bank has also begun a process of developing a national financial inclusion strategy, a process that will bring together many stakeholders for effective implementation of the approved strategy. This will not only bring a synergy among key stakeholders, but it will also align financial inclusion initiatives to the country's Vision 2030. I wish to end my remarks by urging policymakers, researchers, development partners, and private sector players to make use of the survey report and data sets being launched to help your respective institutions to address some of these challenges and gaps that have been identified. So once again, I just want to thank all of you for accepting our invitation for this official launch of the 2024 FinAccess Household Survey Report, and I thank you very much.
Thank you very much, Governor, and thank you to all the previous speakers. So it wouldn't hurt too much to give them another round of applause. At this stage, by the way, is where we were supposed to be pressing the button to launch the thing, but since we already did that, the governor's speech was the climax of this morning. So I want to do just one last task, which is to invite another of my colleagues, Mr. Capitas Chironga. Chironga was also one of the key people driving from the back end the FinAccess survey. So you may have heard from him and seen him, but his task today is to simply thank the people who should be thanked.
Yeah, I'm honored to be here because from last year, November, sleeping was, it was a privilege. And mostly the last 2 days or 3 days, it has been hard for us. So being here, I just want to thank everyone who is here. Thank you very much for making this day a great success to myself and to my team. But I want to go specifically to leadership of Central Bank. Our Governor, Dr. Kamau Thuge, and our Deputy Governor, Dr. Susan Koech. You don't know how much energy brought into the team that worked on this survey. You asked many questions with the intellectual, high intellectual levels, which shaped the quality of the survey instrument, the analysis, and even the report we are launching today. Thank you, Governor, for financial support, all the approvals you made for us to be away, going through the field. We are so grateful. Thank you very much, Governor. Thank you very much, Deputy Governor. We are really proud to have your leadership in the Central Bank of Kenya. Within the Central Bank, we also had directors. I see Director Lusa here, Director Michael Leganza here, and my director, Professor Robert Mudida. We relied on you, your team, throughout the analysis. You are really provided very good leadership for us, and that's why we're able to launch this report today. We had a core team coordinating this survey from the Kenya National Bureau of Statistics and FSD Kenya. Dr. McDonald Obudo, your team was incredible. Your leadership made it possible for us to be able to have this survey done. For Ms. Tamara Cook, we really like your presentation. We really like your comments, your thought process, and really your team has your DNA, and that's why we're able to have this very good survey. Thank you for the coordination. Thank you for partnership, and we look forward to working together going forward. We also had collaborating partners. For the first time, we had many. Previously, as my colleague Dr. Mwangi said, we used to have FSD Kenya alone, but we've about 13 on board now. So this process going forward is actually sustainable. So we have Alliance for Financial Inclusion, Dr. Alfred Hanik. He may be following online from Malaysia. They are very instrumental in terms of financial and technical support. We also had our regulators, Capital Markets Authority, Wycliffe Shamia, Insurance Regulatory Authority, Godfrey Kiptum, CEO, RBA, Retirement Benefits Authority, Charles Mashira, Sasra here, Peter Njuguna, Kenya Deposit Insurance Corporation, Helen Chepkwon. They were really very supportive through this process. Their people joined us in shaping the questions, joining us in the field for control and being part of the analytical team, as well as giving financial support. We also received very good support from Equity Bank, Safaricom, UN Women, they are here. Yeah, we are here. This venue is fully paid for by UN Women. So we really thank UN Women for coming on board. We also have IFAD. IFAD is here. David, thank you very much for the reports which you are going to receive. IFAD fully paid for it. So we really appreciate for all the coordination, collaboration we have received throughout the entire process. Then I had my people we used to report to check what we are doing. We had Professor Mudida here. We have Amrik here, Dr. Amrik here, and Colin Somondi. Every step we used to go to, everything we used to do, we used to refer to them. They gave us guidance. Thank you very much, our seniors, for making this to happen. Then we have a technical team. I just want them to stand wherever they are. Isaac Mwangi, Tabitha Wambui, Generaldine Makunda, all the team, all the technical team, please stand up wherever you are. Yeah, Lucas. So all these teams, I can tell you, they worked very hard. And for the last 1 week, some of them never slept. I know Isaac Mwangi here, when they are doing the final, yes, there's a big team at the corner there. Thank you very much, colleagues, for work well done. You can now sit. So my work was simple, to say thank you, and we really want to thank you for participants, because we might have done all this work and this room would have been empty. But for you coming, as setting time, your time to come here, we really appreciate. For those who read the book Things Fall Apart by Chinua Achebe, they say when you see men leaving their homes to gather into one man's home under the moonlight and share a meal, does not mean that they don't have food in their homes. They just came because they wanted to be together, and it's good to be together. So we are happy that you came, you have been here with us, and we look forward to making use of this survey going forward. I really appreciate it. God bless you. Thank you.
Asante sana Chironga. You guys think it's a joke when he says people didn't sleep. If you look at WhatsApp over the last, especially 1.5 or so weeks, there were messages at 2 a.m., 3 a.m., and they're actually quite deep messages about the findings, the arrangements for this morning, your particular invitations and all that. So the team has worked really hard, and on behalf of all of them, with their director sitting here, if they ask you for leave, please do not say no. They fully deserve it. But Chironga has brought this to a very neat close by thanking everyone, and especially all of you who are here in this room. So mine is to say asanteni sana. Do have yourselves a good rest of the day, and because the year is coming to an end, we may not see you again. Do have yourselves Merry Christmas, Happy Holidays, and see you in 2025. But please go to the website, take a look at the data, play with it, tell us what your findings are, tell us how to improve the FinAccess survey for future surveys. This work belongs to all of us. But for now, asanteni sana, and do have yourselves a good day.
Darkness